today we have invited the Managing Director of Tomorrow Financial Solutions, Mr. Pramu Rodrigo, to explain us how you can get your home loan or an investment loan approved with a bank. Now, for Pramu, first of all, thank you very much for joining us, and we would like to welcome you to Sri Lanka Morning Show program once again.
Thank you, Tishara. It's lovely to be back.
Pramu, can you tell us what are the basic documents that are required if someone is planning to apply for a home loan or an investment loan?
Tishara, the basic documents is pretty much what the bank will require from a person is your identification documents. They want to know who you are. And they will also want to know what sort of income you have. So if your husband and wife are applying for a loan, they will want to know the pay slips of both applicants. And if you have any other income, so you may have a small business running, you will need to give income verification documents for that one as well. And then the second one is, the third one is actually your liabilities. So you may have a personal loan or car loan or credit card. You will need to produce approximately around 3 to 6 months worth of statements to the bank. What they want to know from that is to see whether you can do your repayments and whether you have been doing them on time. They want to check whether you are a good person on credit. That's how they lend. And then the other basic thing that they will look at is your assets and liabilities. So if you have any properties under your name already, you will need to produce the titles of deed. If you don't have the title, you need to produce a rates notice. And if you're earning any income, rental income from one of your properties, you need to produce your rental statements. So those are the basics documents you need to produce to the bank. Now, if you have a liability such as a home loan, which you want to refinance, you need to give, again, a 6 months worth of statements as well. So those are the basics ones when it comes to that.
Pramu, now, if someone is planning to get a home loan or an investment loan, is there a way that they can increase their borrowing capacity?
Yes, Tushar. It's a very, very good question. I've been asked that question quite a lot these days because of the recent changes with the Royal Commission, what happens to the banks. A lot of people lost their borrowing capacity significantly. Answer to that question is yes, you can increase your borrowing capacity. But having said that, you need to have an open mind to that as well. You may not want to go to your existing bank or top tier lender. You may have to go to a different bank because their policies on assessing your income and your liabilities are different. So because of that, your borrowing capacity will increase significantly opposed to a bank that you're already with. So as an example, bank A might give you a borrowing capacity of $300,000. If you go to a bank B, they might give you $350,000. So the reason they might have a bigger or higher borrowing capacity is because their policy is very different to assess your income and assess your liabilities. So therefore, you can increase your borrowing capacity. I tell it to my clients and our investors, do not base your decisions on rates, because if you start based on your rates, your decision, you're going to go to a bank that is going to give you a cheaper rate, which means you ended up with a lower borrowing capacity. If you go to a bank where you're going to get a little bit of a higher rate than your tier 1 lender, you may actually end up with a higher borrowing capacity and you may end up with buying that property that you really want to buy. So again, my advice to the people the viewers of this show is speak to your banker or experienced banker or an experienced broker and ask them to do the research and do the right strategies to increase your borrowing capacity so you can do that.
Now, if someone is self-employed, can they still apply for a home loan or an investment loan?
Yes, of course. See, self-employed people, a lot of self-employed people, they're scared to apply for a loan because for many reasons. Some may not have last 2 years tax returns or last 3 years tax returns. Some may just started their business or they've only done a 1 year's tax return. Now, self-employed people can apply for home loans. There are top-tier lenders who will lend you at 1 year's tax returns. And there are second-tier and third-tier lenders who will lend you with 1 year's tax returns or even with BAS statements. There are some lenders who will lend you on accountant's letter as well. And having said that, there are certain lenders who will lend you without any accountant's letter, but just on your business banking statements. So you need to have a income or business income to show the bank that you are earning well, your business earning well, to get the bank to make that decision. Yes, you can make the repayments if we give the loan to you.
When should someone consider about refinancing their loan?
Yes, a good question. Now, refinancing is a very interesting topic these days because the rates have come down. Everybody wants to refinance. We get a lot of clients asking, we are paying too much of interest. We want to get a better interest rate, so can we please refinance? The answer to that question is anytime if you're ready and if you have all the documentation ready, yes, it's good to go. However, one of the advice I tell my refinance clients is have a look at the value of your property, have a look at the existing borrowing at the moment of your loan. Because you would have paid LMI, lender's mortgage insurance, at the initial stage. If you do refinance again at the same sort of LVR, which means you will have to pay lender's mortgage insurance again. So you need to make that decision consciously to make sure whether it's the correct decision to do it at that time. Just because the rates are lower doesn't mean that refinance is the right, or refinancing of your loan at that particular time is the correct thing.
So is there a specific time frame that you recommend for a person to refinance?
Usually between 2 to 3 years is what you need to have your mortgage. Because within that 2-year period, you would pay a good amount, between 10% of the initial loan amount that you've taken. But again, it's up to you. You could start paying more money and reduce that loan. At the same time, the property value would go up as well. So you may be under 80%. So you may not pay any LMI. But again, it comes to your existing situation, what's the value of the property and what's your current loan balance. So it's good to speak to your banker or the mortgage broker that you're working with. Work with those professionals, and they will help you and give you the right advice.
I think today you shared a very important information for the potential investors and for the people who are planning to buy their home loans. I mean, the first home. So thank you very much for joining us, Pramu, and we would like to have you again to discuss about more topics in coming weeks.
Thank you, Tushara. Thanks for having me.